1, 2, 3, 4, 5, 6, 7. That's right. We've done this pattern 7 times in a row. And it's not a really good sign because what history says is that we could actually go a lot lower from here. I'll explain exactly the reasons why, but at a high level, we're now facing the potential for a false breakout on the weekly. If we inspect a little bit closer, I'll show you exactly what I see. We see that as of right now, last week's high went to a higher high this week, but we're now back below it. That's basically what happened here. If we inspect a little bit closer, you'll see exactly what I'm talking about. We price discovered to a higher high, but failed to hold it. That's the failed break. We go higher, fail to hold it. What usually follows? Well, if the bearish recipe follows, we normally go lower. And this is where, as of right now, the daily chart just did what I mentioned yesterday. It leapfrogged all the way to number 4. So if now we look at the one-day chart, which right now is our leading indicator for higher timeframes, let's just zoom out for 1 second because you're probably familiar with these notes if you watch my videos, which means that, I've been saying fully bully boomtown, buy all dips. Yes, well, not all dips are created equal. The gateway for the bears is 654, and we're still above that. I mentioned that 654 would be the break of the weekly chart. As of right now, we're going from 1 out of 4 bear to 4 out of 4 bear. And that's simply because now, actually, sorry, that's for the weekly chart. Over here, yesterday, meaning one candle ago, let's actually delete everything. If we look right here, we're going to look to the most important number, which is the L and then the C. So if we look here, we have a low going back to Monday of 66217. We actually print a lower low, 661. However, we close back above it. That's a failed breakdown, which means that we technically were below the previous candle, but we failed to hold it. Only 1 out of 4. You ever come back from school with 1 out of 4 and your parents were proud of you? Yeah, me neither. Why? Because 1 out of 4 is not good. That sucks. However, by today, now we have another lower low and we did close below. Yesterday, 661.9. Look at where we closed today, 661.1. What does that mean? We jumped all the way down to number 4. 1, 2, we leapfrog number 2, so we're going to skip that one. Boom, boom. The bears have now broken the one-day chart. The reason why this matters is because after a trend change or 4 out of 4 bear, low or lower lows, then lower highs are sufficient, which means that now the bears, all they have to do is defend the one-day chart, which is now bearish. So if we go back to here, that means that now one of these charts will resolve themselves, like I said, on the weekend. I don't know which one's going to win. Are we going to go back up? Are we going to go down? I don't know. What I know is this. From the beginning of the month, all the way back to the 2nd, the 3rd, the 4th, again, we do this every day. So cautiously bearish to green to caution to green to a little bit red again. So when in doubt, zoom out. And that is why now I've said that the gateway for the bears is 654 for this week. We can actually even update that to make it due for Friday. Next week, the number will change. And this is really important because by closing at or near the low of a candle, it implies more downside. And this is where it gets really tricky because if we look to our dates here, we got PMI today. Who cares? Why? Because the charts are down. But into Friday, the PCE number is going to really matter. We were looking for a number to come in lower. Let's look at this week. So we got core PCE. That whatever this headline number is here is going to likely matter. The market might be surprised because right now there's actually fears that inflation might be going up. So that could cause some concern. However, I think it could actually be bullish, like I mentioned before. If we go down for most of the week, that could be what the bulls need to actually snap it back. And what? Screw the bears. We're not going to break the weekly chart. We're going to save it and bullish on the daily, which means if now we're going to save the daily chart, let me make it really simple for you because your time is valuable. If you go to the second or third link in the description, you will get access to this board. It should say free notes. And these are free because this is what really helped me change my perspective on the market. I stopped trying to be right and I just learned how to make money. I learned how to read a chart. So if right now the one-day chart is broken, it says that after that point, then lower highs are sufficient because they're defending the chart. All right. So if it means that now we have to think about what is going to happen next, in order for us to fix the one-day chart, we now have to think about, all right, is today Wednesday? I think today's Wednesday, right? All right, yeah, sorry. Today's Wednesday. So this will get us to Thursday and then get us to Friday. So by Friday close, we could reverse the chart. We could be back to fully. What's going on here? Could be back to fully bully boomtown buy L dips on the 1-day chart, the 1 week, the 1 month, and every single time frame. Why? That's what we left you with on the weekend here. However, we're starting to get some creeping evidence here. So I'll show you the note. You can pause if you need to. It's right here. Right, we're back to being fully, right, green man's dancing. There we go, green man. Looks like a candle. Bullish on the 1 day, 1 week, 1 month, 3 month, 12 month, bull. However, we got this pesky pattern here or a failed breakout. I went through and explained exactly what that means. Again, pause if you need to. But we're going to go through an update right now. Let's go back to here. Why? We have to be like WADA. It's pretty difficult for me to be losing money and be okay with it. So what I try to do is to think about what am I going to regret more, and then just avoid that, because just because I start losing money doesn't mean the market's going to mean revert or go back to where I want it to go, which means sometimes when I'm losing money, the market can get like really irrational before I get my money back. And we definitely see that with the short sellers right now. I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up or subscribing to the channel, I would greatly appreciate that. Thank you. So why is Tesla up and basically everything else is down? I don't know. I don't know why Tesla's up right now. It is, though. So if we think about where we could go from here, is the leaders really going to lead us to this next leg higher? This news with Intel is very curious too. I'll see if I can come back to that. Come back to this in a moment. What I really want to show you here first is just this false breakout pattern that I've spent most of the video going through and explaining is very important to me. I'll leave you with a video at the very end that explains all that. But here's what it basically comes down to. It's after we get the failed breakout, like we could get more downside. And oops, sorry, let me get out of here. That'll be the failed breakout pattern. So very simply put, we talked about those dots. So these are failed breakouts right here. Happened 5 times before the big one. The big one's what? Well, that's a 20% correction. Okay, so it happened 3 times here. There's a 20% decline. There's I think it's a 20% rally. Here we go, 27% decline. Then a 31% rally. Then we had an 11% decline, and then a 49% rally, and then a 21% decline. And we're currently up by probably 38, 39% right now. That's a big move. What does that mean? We're extended. And in terms of failed breakouts, which are a topping pattern, they're not a guarantee, right? Nothing in life is a guarantee. In the first cycle, there were 3. So we had 20% decline and then 3 failed breakouts before the next decline. Okay. Then this time there were 5. And then we had a bigger cut. Again, I just showed you that decline was bigger. It was a bigger decline of 21%, not 11. So big cut, small cut, big cut. Even just a small cut is going to take off 60 points, 66 points. So where does that get us? Right onto support, which is what I've been arguing for. So, oh my God, we're going to crash land on support. Yeah, that's probably going to be bullish. So we have to really think about where we are, where we could go, and why the pattern is really a leading indicator. The reason why the pattern's a leading indicator is because it leads. If everyone was already thinking the same thing we were, it would already be in the same direction we thought it would be. So I went through here. I'll just explain this really quickly. Look how far the blue line is from here. That's the 50 monthly moving average. It's 5 standard deviations to go from here to there. There's the math on the side. So, hey, the party feels great. I love the party, right? Grab some champagne. Let's pop it. But this mean reversion basically means that on a measured move, if we go back to 2018, and here we're looking at a weekly chart, S&P 500 1-week chart, this is called a measured move. Equal time above equals equal time below. Equal time above equals 2 times below. You can see there's 2 boxes there for the equal 1 box. Okay. And then over here, we got equal time. Okay. And then over here, 1.5 times. So like baseline, we spend at least 1 times below whatever we push to the upside. Go too high above the blue line, push below the blue line. Go too high, go below. Go too high, go 2 times below. 2 times below, 2 times below. And this time here, what's going on with my mouse now? Man, computer's not working today. Mr. Tim Apple, we're supposed to be upgrading stuff, not breaking stuff. We can see it's roughly 1.5 times. All right, there we go. My mouse died. So we'll just go with the trackpad today. So what this basically means is that in terms of math, right, all these nerds are going to tell the robots or the algorithms how to go trade. Happen to run an algorithm. I call it the algo. Why? We only need one. It's the algorithm, not all the algorithms. Everything right now says it's time to throttle back. What does throttle back mean? It just means we're redlining right now. Man, it feels great, right? The wind's in our hair. We're on the highway. We're in cruise control until we're not. higher lows are sufficient. So on higher time frames, we have not done the bearish recipe yet. We have to do this on a monthly perspective, which means that it would take the close of one month and then the close of another month to confirm we're bearish. And by the way, looked pretty silly when I said, hey, I think we're going to start going down. I called the failed breakout pattern right here. But because I said I want to wait for the monthly candle close, well, again, trap a clock, right? There we go. Failed breakdown right there. I flipped being bullish. Why? We have to look at what is on the chart for what's really there, not what we want. We talked about how to make a plan too. It's always easier to do this in hindsight, but in the moment, you're probably like, man, screw risk management. This guy told me to sell everything and I'm losing money because everyone else is making. You probably fall into bucket number 2 when we're going up. When we're going down, though, which we might experience shortly, you might find yourself actually being number 1 as we're going down, which means, of course, you want more when we're going up, and of course, you want less when we're going down. That's why I decide to split the difference, right? It's a thought experiment for me, and it's been working. My account's perfectly fine. I'm actually up this week. Sorry to say that. I think I'm flat to up this week, and that's because I'm trying to be like water. What's water? Well, it ebbs, it flows, and there are peaks and there are cycles. There's a markup period, there's a markdown period, there's a distribution, and there's accumulation. So we have to just be mindful of what people are saying versus what they're doing. And of course, if the YouTube comment section didn't say, oh my God, bears are betas, or we're all rich, we're geniuses, what I got to go buy more, I would say I'm not as confident in my thesis. On the same token, though, I'm going to try to do this with my trackpad, so please bear with me. There's actually a pretty bullish story out there with Intel. People didn't want to believe this either. What's happening? Man, they're turning it around. And Trump actually appears to be able to be flexible, or what? To flip or to flop. Why? Are things totally fine over in Europe? Like Trump seems to be like, I don't know, like it seems to be like pretty pro Team West right now and pretty anti Team East. I like that. Why? I'm on Team West. Said he didn't like this guy and then put $5 billion into it, or actually asked for a $5 billion investment. Then NVIDIA put some money in. Now they're asking big old Apple. Hey, Apple, can you give us a slice of that apple? And Tim Cook is like, maybe there might be a reason why we might want to do that. I'll talk about that in a second here. 2 more quick things. I forgot to even talk about these, so thank you for bearing with me. Sky high S&P 500 signals are a new normal, not bubble. Oh my goodness, that is definitely not what I want to hear. But that fits right into what we just talked about, which was the oops, I don't know if I have it up anymore. The stock market psychology chart. So everyone's like, this is totally fine, right? We're totally fine. Why? Because we're going up, but that's the new normal. So failed breakouts, this is fine, right? That's totally fine. The new normal is not bubblicious. It's bullish, justifiably high. Okay. Anyone can justify whatever that it is that they do. If we look here, though, who else is justifying it? Shut it down. The Magnificent Seven have not, their best days are not behind them. Right? Don't say that, Jim. On the 15th, he said that. He gave us a warning. And where are we, Jim? Are we higher or lower? Where's the 15th here? We just closed below that price, 660.9. Actually, we're still above it. We'd have to decline for one more day to get below the Jim Cramer number. All right, so Jimmy, are you going to be right? Don't be a hero, right? Don't trade it. Just hold on to them. I think that's what he's been saying. He said, I think they can keep running, right? Shouldn't be trading them. What's not to like? Oracle had a huge bond sale today too, and I found that curious. Let's go back to here though. Sorry. On the weekend, we also talked about the this pattern right here. So we have the high, we have a lower high, which is right here at 66. Then we have a lower high right here at 62. So we got higher than the previous number, but over here, the same thing kind of happened. There's your higher high, but it's lower than the previous high. So it's a decline. We have all-time high, right? 78, 76. Then we got 64, double top, 66. All right, 62. We're rolling over. We fall below 50. That's where it starts to get dicey. Was our leading indicator. Might be tomorrow, might be next week, might not happen, might be in a year. I don't know. It's a leading indicator. It doesn't always happen. If you think things are totally fine, you're probably not watching anymore. So Now let's think about what could actually happen if we get a bullish headline. Well, your stock could go up. And honestly, there's a lot of stocks going up right now. We can look here and see that Intel is higher by how much? 6.4%, another 1.7 here. It's basically back to where it was when I had the NVIDIA hype. So now it's going over there asking Tim Cook at Apple for some money. They got 600 billion bones. And it was only 2.5 billion into Corning, I believe. So Apple is actually maybe going to make an investment. And I'll show you the reason why. It's because I thought they might. Here on a weekly and on a monthly, it's basically back to where it started. There is a lot of damage to fix on this chart. It's been completely wrecked. However, if we think objectively about the United States producing chips, we kind of need Intel. So its chart went up. S&P's down today, though. Here's one more quick chart you might or might not be familiar with. It's T1 Energy. Why the F is this stock up by 20% today? Well, that's exactly what I was wondering. Because I was thinking that as it was going up today, I'm thinking, wow, my theme is acting pretty strong here. If I look here, they also have $500 million in a shelf-based prospectus. So I find that pretty curious because the stocks that I don't did pretty good today. Wolf, again, snapback today, right? Long hair, don't care. 3D printing, Burr, that one's going up. And then SCDG also doing pretty good here. There's some other stocks that are not quite that hot, but overall, my count did really good today. I'm quite happy about that. TE is up by 20%, though. So I put the team on its back and said, all right, guys, jump on here. I'll take care of you. Baba's one that I wish I had right now. But there's some stocks that are doing pretty good out there. So even though I think stocks are going to go down, and again, they are. If we look here to VGT, which is technology, it's a pretty big decline. Right? It's about 1% on the week now. We look here to the weekly chart. Sorry, my apologies. On the week, we're down by 0.3. There's that same pattern, though. It's that failed breakout. I don't like failed breakouts. And I say that because I actually really love failed breakdowns. If we look down here to failed breakdowns, I was talking about this extensively. I highly encourage you to go back to my 2022 and 23 videos if you want. Because over time, what I kept saying was this. A failed breakdown is just a bottoming signal. We have to close above the previous candle high for there to be an expansion. Period. Full stop. Well, it's the opposite if we're going the other way then. So on the flip side here, if we get a failed breakout, it's not enough. We have to close below the previous low or, again, invert the chart upside down with SH to get that. It's not enough, right? Are you going to tell me that's bullish? I'm not so sure. Not yet. That's to stop going down and start going up. So that's what I would argue. But right now, there's the dividend on SH. So anyways, this will be the cleanest chart to look at. 1 divided by SPY or 1 divided by SPX, actually. If we look here on the weekly chart, what do we note? Well, it looks a little bit different, right? That looks like a bullish candle. That looks like a failed breakdown. Yes, failed breakdowns are a bottoming pattern. They are not an expansion signal. So we have to wait all the way until Friday. What does Friday imply? Remember, I told you I'll go back here because it's a great reminder for myself too. Believe it or not, I need repeat exposure to get all of the stuff under my belt and remember all of it. So if this false breakout is actually a false breakout, we are going to know no earlier than Friday because this is the chart inverted. Or again, going back to SPY now, we're going to see that chart I'm pointing to here over and over. Some are easier to see than others, but it basically just means that we go to a higher area and then we close below it. We can only close a weekly chart below it if the week is closed out, which would mean on Friday at 4 o'clock. Okay, Friday at 4 o'clock. And then right now we have the Wednesday candle close. So that would leave us Thursday and Friday. Remember, we just talked about this. So if right now the bears have taken us from 1 to 3 to 4 at the close today, the only way that we break this is to actually print a higher high. We would have to now see number 1 from the bulls, minimum. It's actually 2. Again, if you came home and said, hey, Mom, I got 50% on my math test today, she would say, oh, Jimmy, I don't think that's going to be so hot. You better make sure you stay home tonight. We're going to have to learn that math stuff. If you get to 4 out of 4, oh, Jimmy, you're so smart, right? 100%, you're smart. There you go. So right now we're at 0. So right now we don't look so hot if we're bulls on the 1-day chart. Please remind yourself to zoom out when in doubt. And again, the gateway for the bears is 654, which means that we need to resolve this conflict on the 1 day and 1 week by going down and busting the 1 week. That would lead to a break. If we're going to get that reverse move, we talked about what could cause that. It's the PCE. That's in my opinion. Otherwise, If we close roughly where we are right now, I'll tell you what the odds are. Again, just the odds. Why? That's what I like. I like the odds. I'm never trying to bet directionally 100% of the time. I'm trying to ask myself, what's the trade right now? Well, if we just go sideways, we're closing at or near the low of the candle. That implies downside momentum. So on the weekly, it would imply that next week we're going to run a test, which is exactly what I've been saying about the daily chart. I said, I think we're going to run a test at some point. I'm watching this pivot. And here we go. We're now at 4 out of 4, right? Yesterday it started. Today we got it. Doesn't even really look like it though. You're like, ah, you're scared about that. That looks like a higher low. It is a higher low. It's just the short-term candles. That's it. It's the last 3 candles. That's the only thing we really care about here. All right. So the earliest we're either going to get a resolution to this going back to green or this going to red would be on Friday. I really hope that's a simple message I'm leaving you with. And if so, just subscribe and come back. The next upload should be even better. And thank you so much for your support. I'll see you at 8:30 a.m. tomorrow. Thanks again.